Hi, hey everybody. This is Cherry from Real Estate Physician, and today I've got Omar from Boardwalk Wealth with me,
Hey
and
guys.
we are going to. And Omar is a multifamily syndicator, so I thought we'd bring him on. It'd be a good way to discuss how sponsors perform due diligence, especially market analysis. That's one of the most important factors when we look at investment deals. So here's Omar, and then we'll try to keep this short but educational and information for you guys.
Hey Jerry, how's it going?
Good. How are you, Omar?
Not too bad. Are you done saving lives for today?
For today.
Hey, good. So this is actually one of the most important topics. Me and Jerry have talked about it. Guys, this is one of the most important topics because we all know a rising tide lifts all boats. So you could literally get I mean, you shouldn't do this, but you could get the world's worst deal. Everything goes bad, and if the market goes up, all your sins will be forgiven. So that's why this is kind of important, trying to figure out which markets. Again, there is no best market. The best market is the one that you can possibly invest in. That goes without saying. But there's a couple of things that you have to be looking out for. Like Terry, we and you have talked about it. Number one, how well is the employment base diversified? If you've got a one-trick pony, I don't know, a steel factory town in the Midwest, we all know that story. Things really haven't worked out properly. But see, if you're in well-diversified towns like Dallas, right, where no one says employment sector has more than 15 to 18% of the total employment, and the employment base is sufficiently diversified, then what happens is that it's not like, the price of oil, as an example, goes down, and then your entire city decides to get into a recession. So in a place like Dallas, where you've got manufacturing, real estate, banking, insurance, medical care, you name it. Things can go up, things can go down, but overall, you're just chugging along nicely.
Right. So you're saying we like to look for diversification in the employment sector.
Oh yeah,
and
because look, it's
one sector owning more than like 15 to 20% is a
it's like
rule.
a nice good rule of thumb, right? Because the reason why you want to do that is, guys, we just don't know what the future is. So why back yourself into a corner unnecessarily?
Right. You want to mitigate as much risk as possible when we're looking at these deals.
And then within the market, like what you've got to look at is basically, because obviously it's not like, say, all of Dallas is in one thing. There's pockets in Dallas, right? Rich, poor, not as rich. So what you've got to look at wherever you're buying the asset, right, or wherever you're investing in the asset, the median incomes in that zip code, as an example, or in the submarket, as a rough rule of thumb, roughly, ideally they should be 3x, say, the annual rent. So let's assume if your rent per month is $1,000, multiply that by 12, which is the annual rent 12,000, then typically at the bare minimum, ideally, this should be about 3x. So people should be making about $36,000 median income in that zip code and submarket. But anything between 2.5x to 4x is a good number to aim for. Obviously, the higher, the better.
Right, because we say, I mean, you look at generally the market, but obviously you have to, they say real estate is local, right? So at the local level where you're investing in the property, how do you find that information, or is that's freely available? We can look it up.
Oh yeah, look, a lot of this information, number one, Google. Just type, actually you can find the median income by zip code by just literally typing median income by zip code US Census. Now there's a lot of websites that want to sell you this information. Don't do that. This information is available for free. Just go to the US Census website, type the zip code, you'll be able to see the latest numbers.
Okay, great. So besides annual income of the residents, maybe one or two other things that would be helpful when sponsors are looking at investment, what makes it a good investment?
So so typically what we're looking for is basically, apart from those two things, is how good are the school districts in that area. And again, we're not talking about, say, 10 out of 10 or 9 out of 10. We're looking at least 6.5, 7, ideally, or at least 5, because that kind of gives you an idea that, when you have tenants that want actually, say, good schools, they're probably family type tenants, mostly, right? So they're the tenants that will come to your property. They will never want to move because that means changing their schools, and they create the least amount of pain, because creating pain actually means that you might evict them and then they got to find a new school for their kids. So that's a big one. And then typically what I suggest people to do is look at basically the supply and demand in your market, because for instance, what happens is if you've got a flood of supply coming online in one market, it literally just becomes economics 101 after a little while. You can have a nice looking property, but if the guy down the street is desperate and decides to chop off $500 off his rents, well, you can't really do a lot.
Yeah. Is that information we can also find too, knowing, like looking at the supply and demand of, if I buy or invest in this property, hey, next year, 500 units come on board and, your pro forma doesn't really match that.
Well, yes and no, in the sense that it depends how much brain damage you want to take on. Yes, in the sense that you can go to City Hall, pull permits. Actually, you don't physically have to go. You can go to the website, pull permits, and see what's going on. Or what you can also do is just literally just ask the brokers. Hell, you know what? If you're an investor, ask the sponsor to provide you some sort of economic research, because this is available from industry databases. So, I mean, the broker might have to pay for it, but you as an investor don't have to pay for it, right? Number one. And number two, honestly, at the end of the day, look, regardless of how much technology we have, nothing still beats physically touring the property and then physically touring the properties around it. Because a lot of times, pictures are very deceptive.
Yeah.
You kind of have to still look at these things by hand. It sounds archaic, but you still have to do it.
And, obviously sometimes, we are investing out of state or out of town, and it might not make sense for us as if we're passively investing to go tour the property, but this is something, you as a sponsor or syndicator who put these deals together do. Do for investors, correct?
And plus, look, if you can't do it, which makes complete sense, you can't physically tour, Google Earth. Google Maps, just literally drop that little pin, drop it right next to the apartment, and go half a kilometer here. Oh, sorry, half a mile. I'm not in Canada anymore. Half a mile here, half a mile the other way, kind of go around the block, and that'll tell you a lot more than the pretty looking pictures that sponsor shows you.
Wonderful, wonderful. So, we kind of talked about, I guess, the market in general, looking at employment. I suspect that's also tied to population growth.
Oh, yeah.
We hear a lot about population or migration trends to the south or the southeast. Just in general, that's why markets like Texas or Florida, where you're at, are doing well.
Look, those are the look, the reason why I didn't mention it, because everybody says population growth, job growth, income growth, and those are kind of table stakes. But what people don't tell you is, well, how do I find out about jobs growth? How do I find out about population growth? So that's why you're correct. I should have mentioned that, but I thought, let's take the next step and kind of actually give you the tools to figure that out yourself. Because again, on paper, everybody can spin a good story, but what you're trying to do with your hard-earned money is to not fall for the good story, but actually to figure out the truth from truth and what the sponsor is trying to tell you.
Wonderful, wonderful. So we wanted to keep this short. So thanks so much. Is there, if I were a passive investor looking at these deals, we always say, rather than vetting the deal, definitely vet the sponsor. They're the ones managing our assets. What's maybe one or two questions you think as an investor I should ask the sponsor or should be in the investment offering regarding the market when we're talking about doing due diligence on the market?
Well, see, that's a good thing, because you're betting on the jockey, not the horse, number one, right? So look, there's a whole ton of questions. In fact, I'm not trying to do a shameless plug here, Cherry, but we've actually have a pretty extensive blog post on our website on Boardwalk Wealth. You can go to the blog section. But typically, look, what you're trying to do is triangulate the answer, because what you're trying to do is find out about the track record, their professional and personal background. Those sort of things are very important, because these days what's been happening is that everybody with a website who couldn't have a real career is certainly now trying to hawk real estate. So you got to realize, with commercial properties of this sort, there's a lot of more complexity than just buying a house. So professional background is extremely important. Okay, then a track record is very important. But more than that, what you should also realize is that when you ask questions, if your gut is telling you things aren't really working out, trust your gut. Maybe the person is really good, but they're not a good fit for you. So you always have to listen to your gut, but then you can't just have one conversation. What I stress to people is have 2 or 3 or 4 conversations, follow up on those conversations to see if the story matches up.
Yeah.
Right. And then, you invest slowly, but then once you've found the right person, right process, then you can go all in.
Right. And like you said, you want to talk to somebody who doesn't just have a story, but facts, and knows they got the numbers and you can verify.
Exactly.
Yeah. Okay. All right. Well, thanks so much, Omar. Yeah, we'll hopefully, get another chance to speak to you, but thanks for sharing your knowledge with us. And